Hello fellow investors, I will be dedicating the next videos to restaurant stocks, but I don't think I'd be covering all 50 of them. So if you have specific restaurant stocks you want me to review, just hit the comment section below. I've screened McDonald's and Starbucks already, so if you haven't seen those yet, just go to my videos tab. Right now I'm screening CMG, Chipotle Mexican Grill. I trust that you know the ins and outs of my process by now, so I'm just gonna skip through our valuation summary for CMG. CMG is overvalued by these metrics, trading almost 10 times their margins, 9.64. Remember, I pay 1 PE or less for 1% of their margins. At 10 times multiple, this is trading like a Tesla. This is the Tesla of restaurants. The growth expectations for CMG are very high. It's already priced in years of possible speculative growth. Now, if you ask me, is it reasonable? It is reasonable. I see CMG going worldwide and expand their business. I, for one, haven't tried their products just yet, but I'm open to be blown away. Looking at their revenue growth, for the multiple it's trading, I'd say this is too much. It's too high. In contrast, Tesla is growing like 30%, 50% per year. So looking at CMG, I think personally the 10 times multiple is a bit too high. To be fair, CMG only has 28 million shares. Bought back very little and diluted very little as well. So it's very little that it's almost negligible. If the markets value the company this much, there are certain growth expectations for the company, especially on the side of the EPS. If you look at the EPS table here, the growth in EPS is very outstanding, although I'm seeing a plateauing of EPS here, especially in the trailing 12 months. I could be wrong, but that might cause a multiple compression. Maybe people are now cashing out, realizing those gains, explaining the downfall of price at 32.69% of the highs. Price to free cash flow is very high at 45.68. To be a buyer of this metric, I like it below 20. Anything above 20 is overvalued to me. Fourth metric, they don't pay dividends, so nothing to see here. Fifth metric is historical PE. Historical data suggests that CMG had been trading at a higher PE even before. High 40s to 60s, very high PEs for CMG. I think it should trade at single digit to low 10s. PB ratio is high at 17.27. This is half of Apple. Apple is at 34. This is at 17. So if you think CMG is worth half of Apple, PB ratio wise, then buy the stock. Current ratio is high at 1.31. Their debt levels, not including the long-term leases, are somewhat manageable, payable within the 5 years. My take on CMG is sell, don't buy or maybe hold, and put some stop losses to secure your gains. I don't own the stock. I think paying premium is reasonable. Here are my multiples. 10% growth in EPS, 1.25, 20%, 1.5, 30%, 1.75. I have a fair value of CMG of $136.76. Intrinsic value of $234. This is from Guru Focus. It's even higher than my fair values. Here are my entry PEs and prices, 6, 7, 8. I have high price of $192. At current price of 1,318.28, I'd easily put this stock on my avoid list. Even using my premium multiple, at the current price, it's very overvalued. Let the players of this stock have this. Refuse to join them at these prices. Refuse to be a bag holder of this stock. If you're ever putting money on this, You have to understand that it might not be a long-term play. This is like a Netflix stock that could fall very hard on you. You might want to trade this in a broker that offers extended hours. This is a trade play, not a value play. But if I were you, I'd rather buy a tech stock like an Apple, Microsoft, Google than this. Looking at charts would be pointless since our entry prices are miles away from the current price. So yeah, that's my take on CMG. See you guys next video.